All right, let's get a view as to what we can expect in the Asian region, but more broadly too, and particularly what the central banks are doing, particularly as they fight global inflation. Pete McGuire joining us from XM. Pete, terrific to catch up with you again on a Monday morning. All right, why don't we start locally, because we're expecting the big one tomorrow just as far as the Reserve Bank is concerned.
Yes.
What's your latest reading of that, where the Australian economy is sitting right now, and your view perhaps that, you know, it's still well behind the curve?
Well, good morning, Andrew. Yes, it certainly is. Investors are betting almost 10 rate hikes of 25 basis points over the 7 remaining meetings for 22. So are they going to boost it up 40 basis points tomorrow, take it to 0.75? The jury's out. The overall consensus is that it's going to be onward and upward for the Aussie dollar. And of course, I think that would be not a bad situation to be in for a trading mindset. There's plenty of upside there, possibly in the short to medium term for the rest of 22.
All right, so when you're talking about the Aussie dollar, what's the expectation? What's driving that at the moment? Where those rates are likely to go? Plus you've got the China situation, how that's playing out, which is looking a little mixed at this point. And of course, you've got that strength of the US dollar.
Well, exactly. The US dollar, Andrew, we had a high there a couple of weeks back at around about 105 for that US dollar index at a 20-year high. Now, we're well back from that at the moment. We're just over 102. So as that's come off, that hot air's exhausted. It was exhausted to the upside. The hot air's being taken out of the market. The Aussies had a nice lift up from that 68, 69 handle back at 72 odd. And I think that the US dollar, we saw those numbers come out Friday as far as non-farm payrolls. The equity markets got spanked down, NASDAQ down nearly 2.5%. So I think that the US may give up some more, maybe a 101.50 in the short term, and there could be a time there that the Aussie may hit a 72.5. If those numbers come out tomorrow that are strong as far as, a big increase as far as basis points, then that will be certainly an attraction to our dollar.
Yeah, okay. So tomorrow the expectation there, or the consideration of not if the RBA will hike, but by how much.
Yeah.
Similar story too when we take a look at Europe, given where inflation is at the moment, running red hot. So the ECB, really, it's likely to be forced to act, isn't it, by lifting rates for the first time in a decade.
First time in a decade, exactly right, Andrew, and probably 25 basis points. It's running at 8.1%, the Eurozone inflation number. So, yeah, that's year on year to May. So it's absolutely red hot. And the value of the euro, we got that sitting at around about 107 against the US dollar. So it's been very strongly, it was being sold off. But considering where we are at the moment, I wouldn't be surprised to see a little bit more movement in that euro and Lagarde's comments where we run for the next matter of months. I'm worried about Jamie Dimon and of Elon Musk's comments. Jamie saying that there could be an economic hurricane around the corner. So they tell me hurricanes aren't that nice to live through, Andrew.
Yeah, well, I don't know that I'd be paying much attention to Elon Musk, because he did backtrack, as we were saying earlier there. It's a little confusing as to what he has planned for the company. But just as far as Europe is concerned, I also note that EU retail sales, they were down sharply. So it is a tricky path that the ECB have to tread.
Well, exactly right. You know, you start raising rates and start boosting that side of the ledger. What impact is it having to retail sales, consumer confidence, sentiment, all of those inputs? And running at 8.1% inflation, it really is a handbrake for, well, not only economic growth, but the other part as far as, Main Street's warmth. It's a European summer. Let's hope that they get some great tourist dollars. Plenty of Americans may travel to Europe over this time because of the strength of the dollar. So that can all help as far as hard currency. But yeah, it's not a great position to be in for, I think, any countries with, runaway inflation.
All right, so let's get back to the States there. What's going on? You mentioned those comments from Jamie Dimon, also Elon Musk saying he's got a bad feeling about the economy, whatever that means. All right, so just taking a look at that latest jobs report, the non-farm payrolls. So employment growth there above expectations. However, there are signs there that wages growth is cooling.
Absolutely. That's the hard one to keep up. You got 390,000 jobs for May, and you're running at around about 3.6%. So the job rate is steady, but it's still very, very low. But yes, inflation running, that 8 or 9% number, what's that causing to pay rises? Are people in a better position or a worse position? And, the overall, very high gas prices and petrol prices and diesel across the US. So all of these impacts are greatly hampering Main Street, and it's going to be a very interesting, 3 to 6 months ahead, how the consumer is battling these sort of problems, Andrew.
Pete, China, what's your view at the moment? Is it pretty tricky to see the path ahead, given obviously they're easing those COVID lockdowns, but obviously there's still significant pressures there for the economy?
Absolutely. I think, you've just got to, it's a viewpoint you've just got to look at each week and just take appreciation, the strength of the yuan, how the Chinese equity markets are going, their numbers as far as data, and all of those, I think, metrics that any trader looks at, and then they get an appreciation. How is that impacting Aussie dollar? How is that impacting logistics? All matters of as far as trade and so on. So yeah, any trader just sits back and looks at the big picture and then tries to digest all of those inputs and then tries to make a dollar out of how they can benefit from movement. Andrew,
Pete, you mentioned oil a little earlier. What's your view of the market at the moment? Because we did have OPEC Plus obviously boosting production, but the market essentially saying it's not going to be enough. You've also got, as far as likely demand out of China is concerned. I know last week you were saying you're keeping a close eye on this, given where those prices are going at the moment.
Well, Andrew, it hit 123, then it backed off all the way to nearly 113 for Brent. Now it's back at 121. So if you were trading one market last week, and possibly it could be the same this week, oil has just been a standout, huge moves, huge price opportunity for traders. And I think the collective mindset, I was on the call to OPEC the other morning when they announced as far as production increases. So from where we're sitting, maybe it's a 123, 125 handle. Not good for the consumer, Andrew. And I think there's going to be more upside in the short term. But it's a very volatile market to trade, and that creates wonderful opportunity, both long and short, over the business week.
Yeah, what do you make of the local market, Pete? I mean, it's been talked as an energy crisis that we're facing here. I mean, more globally as well, of course, but with both oil and, of course, gas.
Absolutely, that's the great challenge. And so, yeah, it's not a good position to be in. You've got very, very high prices. You've got production issues, and of course, the cost to the consumer. So, yeah, it's not easy, Andrew. It's far from easy, and all of these inputs again are really creating havoc for the consumer from inflation, and let's just see where things go over the next matter of weeks. It could be very delicate, and we're certainly keeping an eye on it and conscious of the big picture.